Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Qingyi. Good evening. Today is December 26th, Friday. I'm analyst Zheng Jida. Please remember to like, subscribe, and share our channel from last time. If you have any investment questions, feel free to leave a comment. If I don't get a chance to answer today, I'll make sure to address them one by one in the next session. So, after the Christmas holiday yesterday, the US stock market was closed, and today is the first trading day after the break. It should be a good start. Anyway, looking ahead now, looking toward 2026, no matter how everyone has operated in the past, I wish you all the best. Choosing Taiwan stocks or investing in US stocks or any other investments, you can make money and fill your pockets. And since next week, I won't be the one doing the live stream, I want to wish everyone a happy new year 2026 in advance. May you all make lots of money. All right, good night, everyone. For those just joining, hello to Hui Jun. Good evening, Hui Jun. And also to Flying Fish, Mei Daitze, and Alice Fu. Has Alice Fu joined yet? I haven't seen her. And who else? Good evening to Caesar as well. Good night, everyone. All right, now we're about to talk with everyone about today's investment focus. Good evening to the staff as well. It's rare today a lot of you have joined the stream. So let me remind everyone, every Friday afternoon at around 3:30 p.m. For now, it's tentatively set at 3:30. Every Friday afternoon, there'll be a short live stream called the Yuanta Weekend Report, lasting about 3 to 5 minutes. The main focus is usually on topics related to Taiwan stocks. We'll cover some of the key points about Taiwan stocks for the coming week, preview some of the more popular or spotlight stocks, or discuss major international events. In that short 5-minute video, we'll give everyone a very quick and concise summary. So if you're interested in Taiwan stocks and want to learn more, be sure to check out our Yuanta Weekend Report live stream every Friday. As for the content, well, we've been doing this continuously over the past week or two, and it just so happens that today it's my turn. So I'm actually doing 2 live streams today. One I recorded at 3:30 in the afternoon, and now another one tonight. Next week, on January 2nd, it's me again for the first session of 2026. So if you have anything you'd like to know, feel free to leave your valuable feedback in the comments during the Yuanta Weekend Report live stream. We'd love to hear from you and add more information for everyone. All right, so regarding the investment focus, let's first take a look at what the new FADE system actually is. Why did Finance Minister Vicente specifically mention that FADE might start next year? Whether it's the new chairperson or the committee, they're all moving toward implementing this new system. Exactly what kind of new system did he mention, and how does it serve as guidance for monetary policy? That's the first thing. Second, regarding the US-China trade war, we see that the US is targeting China with what's called the Section 301 clause. What are the characteristics of Section 301, and what about semiconductor tariffs? Although they say they're going to restrain semiconductor tariffs, the actual implementation will be a year and a half from now. So how should we look at this? Will the US-China trade war continue next year, or is this Section 301 just a smokescreen? As for industry news, we especially need to pay attention to that. There's also the AI leader NVIDIA. NVIDIA just spent $20 billion yesterday. $20 billion. They went to a company, but it wasn't an acquisition. Instead, they're bringing in the company's licenses, technology, and talent to join NVIDIA's team. So which company is it? And why do I say that this company's involvement is like adding wings to a tiger for NVIDIA? It's icing on the cake, giving them an extra boost. It actually fills in some of NVIDIA's original weaknesses, turning them into strengths, which is a big plus for everyone. And of course, it's a big plus for NVIDIA too. As for AMD, we need to pay close attention to whether AMD might get replaced in this wave of mergers and acquisitions. Why do I say this? Because Samsung specifically mentioned today that by 2027, they might use their own self-developed chips. If their chips improve by then, they might not need AMD's chips anymore. This is relevant to the 2 major AI leaders, including NVIDIA. How should we look at this? In tonight's show, I'll analyze everything for everyone, okay? Good night, good night. Who is this? Hector, good evening. And Yulin, sparkling water. Good night to you too. Remember to check out the new show. It aired at 3:30 this afternoon, already recorded. You can go watch it. Let me see, next week too, I'll take a look. And after watching, remember to leave a comment, like, and share. Comment, like, and share. That's about it. I hope everyone will support our new short 5-minute makeup show, a 5-minute program. All right, let's take a look at Besant, the finance minister. Besant said that there will be a new chairman next year. The Federal Reserve chairman will be replaced and Powell will step down. He said the new chairman or committee members might gradually consider getting rid of the dot plot chart. What does it mean to get rid of the dot plot? Actually, I think the dot plot is pretty useful. Basically, for every quarter when the Federal Reserve meets in March, June, September, and December, During these quarterly meetings each year, the Fed releases what's called the dot plot. So what exactly is the dot plot? The dot plot records each committee member, regardless of whether they have voting rights or not, all 19 members, and their views on where interest rates might be in the future, whether that's this year, next year, the year after, or even over the long term. They compile statistics on this. So from the dot plot, you can more or less see where most committee members think interest rates will be this year, next year, the year after, or even in the long run, and what range they might fall into. This helps the market to understand whether each committee member's stance on interest rates is more dovish or more hawkish. Of course, the dots themselves don't specify who is who. They're just statistical points. Where you see more dots clustered together, that indicates which range most of the committee members fall into. So he mentioned that next year they might do away with a dot plot. Why is that? He gave a few reasons. He said that anyway, the Fed chair will change next year, possibly to Waller, Warsh, or Hassett. And they've said that they want to gradually scale back the Fed's functions and actions. And also to reduce the market's tendency to over-interpret the central bank, so that the Fed's monetary policy can become more predictable. What does that mean? Simply put, it means not letting the market keep guessing. Don't let the market keep guessing. Ultimately, the Fed wants to avoid a situation where people are left wondering, is the Fed going to be more dovish or hawkish this month or next quarter? They want to make it clear and simple for the market to understand, whether they're moving toward rate cuts, by how much, or if they're heading toward rate hikes, and so on, instead of leaving the market in a state of confusion and uncertainty. This Bostic person mentioned that they might get rid of the dot plot, and instead, officials might communicate more clearly and in more detail through their statements, rather than relying on other tools like the dot plot or other technical instruments that could lead the market to overinterpret things. Because sometimes when the market overinterprets things, maybe it ends up interpreting them incorrectly. And if the interpretation is wrong, it could cause the Fed's intended effects to go in a different direction, and they might not actually achieve what they want. So instead, he hopes that they can just be open and straightforward, explain things clearly, and reduce market misunderstandings and misinterpretations. So as for this approach, I think it has its pros and cons. It's really a matter of perspective. Let me put it this way. If your monetary policy is too transparent, honestly, that's not necessarily a good thing either. If your monetary policy is overly transparent, it can end up with the whole market already guessing or figuring out your policy before you even announce it. So sometimes, by the time it's confirmed that rates will be cut or raised, the impact and effectiveness might not be as strong. That can happen too. Of course, the benefit is that at least the market isn't left guessing. You know exactly how many basis points rates will be cut or raised. Everything is clear and transparent. So I think there are both pros and cons to this. As for how the Fed chair or the team should make these adjustments next year, I think we'll have to wait and see. After all, there will be new appointees and new committee members. Who will be placed? Will they lean more dovish or hawkish? And how will Trump use his heavy hand in all this? If his invisible hand reaches into the Fed to intervene, we'll just keep tracking it. This is just to give everyone a bit of background, so you know that Besant holds this particular stance. Now, moving on to the trade war side note, I want to remind everyone that next year, the US will be focused on elections. Both the House of Representatives and the Senate will be up for re-election. During this election process, of course, the Republican Party, specifically Trump's Republicans, definitely don't want too many unexpected events to occur. In other words, next year, whether it's the economy or on Billy's side, things should lean more towards stable execution without any major disruptions. Because if things aren't handled well, and the trade war really gets out of hand, it could lead to a drop in poll numbers or a sudden spike in inflation, or even cause some companies to lose money on investments, among many other impacts. So next year, I think when it comes to economic decision-making and policies, including things like beef policy, the Republican Party will likely keep rolling out new initiatives. So the trade representative said today, and specifically mentioned to everyone, that regarding the 301 investigation into Chinese semiconductors, they announced plans to impose tariffs. But interestingly, he said they would announce an additional $3 billion in tariffs on some Chinese semiconductor products. But as of now, it's zero. There are currently no tariffs being imposed. At present, there are no tariffs on Chinese semiconductors. But after the investigation is completed, they said that over the next 18 months, this could change. They said they would impose tariffs, but they didn't specify how much, whether it's 0.1% or 100%. They didn't say. They only mentioned that tariffs would be imposed in the future. So when is this future? It's 18 months from now, which is a year and a half, meaning June 2027. So you can imagine that basically the US Trade Representative's Office making this announcement, in reality, its actual effect is almost the same as having no tariffs at all. Because first of all, it's still a year and a half, 18 months away from now. Second, in November next year, November 2026, the US will have its midterm elections, which will be a major reshuffling, a big changeover. After the midterms, will the Republicans have the majority? Or will the Democrats control both the House and the Senate? Who will actually come out on top? Or will it end up being a deadlock? For example, maybe the Republicans will have the majority in the House, but the Democrats will make a comeback in the Senate. Or will both chambers go to the Democrats, or both to the Republicans? Right now, nobody knows for sure. So whether the Democrats or Republicans will have the upper hand is still uncertain. That's why regarding this bill, specifically the Semiconductor 301 investigation, it will only be implemented 18 months later. That's what I think. Honestly, the impact right now is minimal, really not significant at all. Any real action or clear implementation will only happen after next November's elections. So, in my opinion, this news doesn't really affect the overall market trend. It doesn't have much impact. First, nothing is happening at the moment. And second, there are still a lot of uncertainties even 18 months from now. So just take note of this information and keep it in mind. As for the US 10-year Treasury yield, it's still holding steady at 4.115%. Let me add a bit more for everyone. For 2026, it's better to look at next year, since this year is almost over. Once today's live stream is done, this year is basically over, because I won't be hosting next week. So after today's live stream, next week we'll basically be starting to look ahead to 2026. Let's take a look at the endpoint for 2026. The expected interest rate is coming down to 3.1%. At 3.1% compared to the current level, that means there's still room for about 2 more rate cuts. So for 2026, the number of expected rate cuts is also around 2.2 times. Whether it'll be 2 or more than 2, I think next year will depend on a lot of economic data, a lot of statements from officials, and of course, most importantly, Trump. How will he influence the relevant members of the Federal Reserve? The way the doves and hawks are positioned will have a pretty big impact on the number of rate cuts or the direction of interest rates. So I just wanted to quickly give everyone an update on the projected end rate and number of rate cuts for 2026. Okay, good evening to Amy Lee and Melissa as well. Good evening, everyone. All right, moving on to the US dollar index. Of course, with Trump taking a more dovish stance, the dollar remains relatively weak today as well. It's hovering around 98 points, up just 0.07%. In the short term, the dollar is still in a weak and volatile pattern. Just to let everyone know, basically, there's nothing major happening on the Western front today. No economic data releases, and it also happens to be the first trading day after Christmas. All right, speaking of Christmas, hey Jeffy, good evening. Speaking of Christmas, we're doing a live stream today, right? I really appreciate everyone joining us online. Over the past several years of live streaming, we've all gone through thick and thin together, watching the markets, no matter if they're good or bad, no matter what Trump has done this year, whether it's making big statements, imposing reciprocal tariffs from February and March, or the global back and forth on tariffs that's been going on until now. There's been a lot of turmoil, and this year's market volatility has been extremely high. I'm really happy to see that everyone has continued to join us online. I think everyone's performance has been pretty steady. Now, as of today, the 26th, right after Christmas, you know what happened today? This afternoon, I did a live stream, right? I streamed once, recorded a 5-minute segment for the Kunyi Weekend Report, and then tonight, I'm recording this, right? So what's been a bit frustrating today? The frustrating thing is that tonight, our company is actually holding our year-end party. For the year-end party, everyone went to have a Christmas feast at this really famous hotel buffet, but I couldn't go. Why? Because I had to do the live stream, so I didn't get to join. Instead, I just bought myself a bento for dinner. Pretty sad, just eating a bento by myself. So while everyone else was at the year-end party, I was stuck with my bento. That's why I've decided after we finish this live stream, let's not spend too much time tonight, okay? After the stream, I'm going to go buy some salted crispy chicken for myself. After work, I'm gonna get myself a late-night snack, okay? Okay, Amy said listening to my live stream makes time fly by, right? All right, good. At the very least, if listening makes you feel like time passes quickly, that's a good thing. As long as it doesn't make you more and more sleepy, then it's all good. All right, let's take another look at the US dollar index. Also, I want to add a bit more about geopolitical risks for everyone. Tensions between the US and Venezuela have been escalating. The US has deployed armed forces and special forces to the Caribbean and announced operations in the Eastern Pacific too. They even attacked a drug trafficking ship. Oh, and in addition, besides Trump putting high pressure on Venezuelan President Maduro and demanding that he step down, today he also launched an attack against the ISIS group in Nigeria, which is the Islamic State terrorist organization. Alright, so here comes the main point. Everyone is probably wondering, why is it that during Christmas, you're suddenly attacking Venezuela's drug trafficking ships and then turning around to strike at these terrorist organizations in Nigeria? Won't this cause a lot of turmoil? Will all these geopolitical risks push oil prices to surge again? Let me tell you all, there's no need to worry too much. These kinds of conflicts or attacks that happen outside of the major powers usually only have a short-term effect. Maybe they'll push up oil prices or gold prices a bit, but in the long run, the impact isn't significant. So you can just treat this as a minor skirmish, nothing major. It really doesn't have much impact. Right now, oil prices have only gone up by about 0.1%. If you're trading oil, basically you just need to watch this 50-day moving average. You can see that this 50-day moving average has held steady from June of this year up until now, which is almost half a year. This green seasonal moving average line still hasn't been broken through up to now. Every time the price touches it, it gets pushed down, touches it and drops, touches it and drops. It's happened over 600 times. Every time it touches, it just comes right back down. It simply can't break through. So as long as this green line, including the 200-day moving average, hasn't been reversed upward, as long as there's no breakthrough, in fact, oil prices still don't have any real momentum for a significant rise. So, of course, if oil prices don't go up, there won't necessarily be a big boost to inflation or the CPI. The CPI won't get out of control. It won't rise. So of course, the Fed will keep watching inflation. As long as it doesn't get out of control, the Fed will still move toward cutting rates next year. I remember maybe last Monday or Tuesday, just a couple of days ago, a student asked about this in the chat room, though I can't remember exactly who it was. He said, "Teacher, why does the price of crude oil keeps dropping? It keeps going down, but when we go to CPC to fill up our gas, it feels like the gas prices haven't really dropped much. It doesn't seem proportional. Clearly, international crude oil prices are falling, so why does it feel like gas prices haven't really dropped?" Well, there are probably two main reasons. One is that, in fact, even though international oil prices are dropping, sometimes we import crude oil from Saudi Arabia or other countries. The prices of this crude oil, the so-called international quotations, or the prices quoted for Asia, the US, or Europe, aren't necessarily the same. The crude oil prices, whether it's New York crude or Brent crude, are international benchmark prices for everyone to reference and understand. But when these oil-producing countries actually sell crude oil to our country, in reality, they classify and grade it in many different ways. There's gasoline, naphtha crude, fuel oil, diesel. Prices for these vary greatly, and prices for oil sold to Asia, Europe, or the Americas are different. Thus, you might see a situation where, though international oil prices are dropping, CPC corporations' prices don't fall as much. Okay, that's one thing. Now, the second thing, let's talk about it from a business perspective. From a business point of view, it's kind of like this. Remember when we used to buy eggs, and during the egg shortage, when there weren't enough eggs available? Each egg might have cost $3, but as prices kept rising, it could go up to $8 per egg, right? When we go out for breakfast, like at May or May, and order a sandwich, it used to be just $5 to add an egg, right? But now, if you tell the owner, "Boss, I want an egg because I'm craving egg yolk, so please fry me one," the owner will tell you that now a fried egg costs $15. Right? This happens when there's a shortage of raw materials. Prices just keep going up and up. So why do I say this is related to business? When crude oil prices are dropping, you'll notice that CPC's price cuts aren't that significant. It's just like what I mentioned earlier about the egg shortage. When there's a shortage of eggs, the price keeps going up, right? But when there's no shortage of eggs, have you noticed something? When eggs aren't in short supply and you go to Maydang to buy breakfast, a fried egg still costs $45 each. Even when the price drops from $8 to $5, the fried egg at Maydang is still $15 each. It doesn't go down, you know? At best, it might drop to $12.3, or if you're lucky, $10, and you'd be thrilled. Why is that? Because in business, what do they have to do? Business people, companies, what do they have to do? Sometimes they do things like this. When the price of raw materials goes up, they raise all their prices along with it. But have you noticed what happens when the price of upstream raw materials drops? When suppliers lower their prices, do the retail prices go down too? They don't. Why? Because that way they make even more profit. You have to understand this. So why do you see that even though crude oil prices are clearly falling, the price drop in the midstream sector isn't that significant? There are basically two reasons for this, mainly just these two: business considerations and the differences in international trading prices. The differences between regions also lead to these kinds of situations. So that's just a quick additional explanation, a simple supplement. Now, regarding the question about sparkling water, is there a cash rebate or not? There isn't a cash rebate, but I've heard about vouchers. I've heard there are restaurant vouchers. But to be honest, I've never actually used those restaurant vouchers myself, right? They just gave me just one restaurant voucher, which was for a buffet meal. In the end, it was just one voucher. Actually, just one voucher isn't enough. You should at least give two, right? Give two. If you really want to participate or invite a friend, at least two people make it easier to go eat together, right? Because you can't just take one voucher. Let me give an example. Like, say, a buffet voucher for the Jinhua Hotel or something like that. Okay, so if I just take one, I go eat by myself, doesn't that feel even lonelier? Eating while tearing up, eating at the buffet alone? It just feels like you really need friends to go together. That's when it's actually fun. When everyone goes together, people think, hey, this Teacher Jang, you have this voucher, so you don't have to pay. But if I want to go eat with you, I have to pay for myself. Then I don't want to go. I'd rather just have a bowl of braised pork rice instead. That's how it ends up. So you could say this voucher, it should come in pairs, at least 2 or 4 vouchers for the reform. I think that would be better. The award ceremony is at Golden Mountain. Oh really? I didn't know that. I didn't know. We want the golden silk tent hat. Our department's year-end party this time isn't at Jinshan. It's at a pretty famous large hotel. We're holding the department's year-end party there. The department's year-end party. Ah, Kubuli said they could go eat with me. Thank you for going with me to eat. But you guys have to pay for yourselves, right? I feel bad if you have to pay for yourselves. I really do. So I said, it doesn't matter. It's the same no matter who goes to eat. Sometimes when we go out to eat, we have meal vouchers, and then everyone goes together. Maybe some people just go with you because you have meal vouchers, so they go with you to eat. Usually that's how it works. That's usually what I do. I'll usually say either I'll treat and invite someone to eat with me, or I'll invite a friend to go eat together. Yeah, that's how I am. Otherwise, my meal vouchers just end up being used as a discount. If everyone goes together as a group, maybe the price will be even lower. That's basically the idea. Otherwise, if you need someone to go with you, but no one wants to go, then what can you do, right? Okay, so that's how it is. The midstream price is the contract price. You buy it by the barrel. No, it's not like you have to buy it 1 barrel at a time. Anyway, if you buy a lot, you can negotiate a lot. Just remember that. Crude oil prices basically fluctuate like this, or move in this kind of direction. But no matter what, just remember, when prices are low, you should let people fill up their tanks. It's kind of like that. Anyway, prices go up and down, fluctuating all the time. Just use it as a reference. As for the economic data, since we're just about to enter the New Year period, a lot of economic data hasn't been released. This week and next week, for example, let me briefly fill you in. Next week, of course, we'll be facing New Year's Day on January 1st. So regarding the economic data, let's give everyone a preview. Just a quick preview. For example, next week on December 29th and 30th, most of the data release will be related to new housing or real estate. The Chicago Purchasing Managers Index for December in the US will be announced on December 30th. I think the more important event will be at the end of December, on the very last day of the year, when the Fed's meeting minutes will be released at 3 a.m. I believe this is quite significant. Also, on the 31st, there will be China's official manufacturing and non-manufacturing PMI indices, which are also worth referencing. As for January 1st, New Year's Day, and January 2nd, it's enough to just pay attention to the manufacturing PMI data from Europe and the United States. So looking ahead to next week, in fact, since it's also the New Year's holiday and everyone will be taking time off, there will be relatively fewer economic data releases. Market volatility will also be rather subdued, and trading volume will be low, since this includes foreign investors, institutional investors, and even retail investors. Everyone is still in holiday mode, so real trading activity will probably pick up around January 5th when people return. That's when we'll see a bigger impact. But for now, everything looks fine, really. It's all good. So I'll just give everyone a brief preview of the upcoming economic data. As for earnings reports, after mid to late January, we'll start seeing fourth quarter earnings, with financial stocks leading the way. At that time, after our group finishes the show, we'll analyze and track them for everyone, but that won't happen until after January 13th. As for industry-related news about earnings reports, let's take a look at why I say, let's take a look. What did it make up for? It made up for this shortcoming, which is very important because it's like adding wings to a tiger. There's a piece of news. The first thing it says is that it's been reported that they've already informed their Chinese clients that after mid-February 2026, which is around our Lunar New Year, next year February is roughly when the Spring Festival falls. I remember it starts on February 14th, which is also Valentine's Day, so that's when our Lunar New Year begins. He said that around the Spring Festival, they might start shipping H200 chips to China, and it's expected to be between 5,000 to 10,000 sets, which is about 40,000 to 80,000 H200 chips. I think more or less, this will also help Nvidia's revenue to some extent. Whether this help is short-term or long-term, and whether China will continue to have a huge demand for H100, H200, or even higher-end chips in the future, I think we still need to keep watching, just as we reminded everyone before. China, including the United States, is actively developing their own domestic chips and semiconductors. They don't want to rely on American technology, and the US also doesn't want to depend too much on foreign technology, like Samsung in South Korea or TSMC in Taiwan. They want these major chip manufacturers to actually set up factories in the US, and even hope that some of the technology will stay rooted in the US or in China. So both China and the US are playing the same game. So when it comes to whether these H200 level chips will actually be exported to China by next February, and whether China is willing to receive and even approve them, how long will they really last? That's something we still need to keep an eye on. So for now, it's just that in the short term, they're using, accepting, and importing these H200s. Of course, this will help Nvidia's revenue. But as for how long this will last in the long run, we'll have to keep tracking it over time. Now, there's another piece of news that I think is even more important. That is, going back to NVIDIA, they spent $20 billion to acquire a startup called Grok, which is not theirs. Gloria, but the AI under Musk's company is called Gloria Grok. Maybe that's the AI one, that's Musk's. But Grok is different, it's a startup company. I remember it was founded about 7 or 8 years ago, so it's a really new company. Now, this company, Grok, its main product focuses on AI-related inference chips, specifically inference chips, not general-purpose chips, but inference chips, which also fall under the chip-related category. Now, the founder of this company is quite interesting. The founder was actually a former engineer who designed Google's TPU chips. As everyone knows, there was a lot of buzz recently about Google's TPU chips. They did a great job, the performance is high and the cost is low, and I heard that Meta wants to spend billions of dollars to buy Google's TPU chips, because TPU chips are specialized application chips, specifically designed for training AI. Its cost is much lower than NVIDIA's general-purpose GPU chips, but its performance is also quite good. So a lot of companies are thinking, wow, Google has developed this kind of TPU with great performance, and the price is low, so of course they want to do business with Google and buy from them. That's why things are moving in this direction. So back then, why did NVIDIA's stock price keep dropping while Google's kept hitting new highs? It was all because of this topic. Now, let's talk about this company, GLUOQ. It's not about TPU experience. Their chip is called an inference chip. In English, it's called an LPU. Remember this. So NVIDIA has GPUs, and Google has its special application chip specifically for training AI, called the TPU. Now, this company is launching the LPU, which is called an inference chip. So what exactly does an inference chip do? Let me briefly explain what an inference chip is. When we're doing AI training, whether it's training the AI to search for information, analyze data, or even handle things like ethics, morality, or making predictions and developments based on data, it's not just about collecting and organizing information for you to see. It's also about reasoning out relevant answers. Reasoning about more in-depth things, the process of reasoning itself, takes time. It's not something that happens instantly. For example, let's say today we see an apple. You can't just look at an apple and immediately know it's an apple, right? Sure, you know an apple is a fruit, but if you want to think further, what if an apple suddenly falls to the ground? Why did the apple fall to the ground? So after reasoning, why did it fall to the ground? Oh, because we later learned that there's gravity, right? So when you're looking at something, if you simply train AI to know that, hey, when an apple falls to the ground, it gets damaged, that's just basic training. You're teaching the AI that when an apple falls, it will get bruised or broken. But to go a step further, how do you train AI? You let it know that the apple falls because it will get damaged, but what is the reason it falls? What are the effects after it falls? What causes the apple to fall downwards? Is it gravity, or is it some human factor, or something else? First, there's Newton's theorem, then Newton's laws of motion, and so on. This falls under inference. It's not just about the apple falling down. If you want to prevent this action, it's not that simple. So when it comes to deeper, more inferential things, there's a lot involved, and it takes time. And also, the more time it takes, so when a GPU is used to perform this kind of inferential function within the GPU chip, it ends up consuming more energy and taking longer. Now, this company called Grok specializes in doing inference work. What does it help with? It helps make up for the shortcomings of GPUs when it comes to inference. It makes inference faster, much faster, and reduces the latency issues in its computations. Of course, it lowers latency. So its overall response is much faster than the original, like NVIDIA's GPU, and the response keeps getting faster. At this point, NVIDIA spent $20 billion. So what did they do with the $2 billion to address the weaknesses of their original GPU chips? They used that money to purchase a technology license from Grok, and even brought in their CEO and founder to help address these issues. This approach by the team is kind of similar to what Meta and Google do. They really don't want to acquire the whole company. What do they need? Even though they need the technology and talent from these new AI startups, they don't want to buy the entire company. They just want to bring in the talent and technology, and that's enough for them. So what NVIDIA is doing here, if you still don't quite get it, that's okay. Let me show you a picture. Once you take a look at this image, you'll understand exactly where NVIDIA, Google, and Grok each have their own unique advantages. All right, gift vouchers aren't practical. That's true. But exchanging them for cash is simpler. With 2 vouchers, you can get sparkling water. Going as a pair is more convenient. As for the answer, let's break it down into 3 parts. When it comes to training, specifically the core training capabilities for AI, it's rated 5 stars. The more stars, the better its performance. So for NVIDIA, its AI training capabilities are truly top-notch, absolutely excellent, 5 stars. But when it comes to inference, as I just mentioned, it only gets 3 stars, which is pretty low, just average, really. However, when it comes to AR and related chips, the GPU is very versatile. Its flexibility is extremely high. What do I mean by that? Basically, for every company, it might be possible to stack different chips, whether you want to build small computers, large enterprise computers, CSPs, or even higher-level AI computing or inference platforms. Its flexibility is huge. You can scale it up or down, go deep or wide, so it depends on how the company wants to use it. It handles what you need. That's why NVIDIA's GPU chips are extremely flexible, and the entire NVIDIA AI chip ecosystem is broad and deep. The supply chain, upstream and downstream, is also very complete. That's my answer regarding the advantages of NVIDIA's chips. As for its downside, the only real issue is that its inference latency is relatively low. So what about Google? What about Google's TPU chips? They're also dedicated to AI. Their training capability is also very good. It has low power consumption, low cost, and high efficiency, which feels pretty good, also 5 stars. As for inference latency, it's a bit better than NVIDIA's, so I'd give it about 4 stars. However, the flexibility of its chips is quite limited. Very, very limited. Why? Because it's only suitable for use within Google in a relatively closed environment. It works for Google, but it's not like all companies around the world can use it in an open way. The data and features aren't very open. It's basically Google for Google, and it works very well for them. So when it comes to TPU chips, their training capability is good. Inference latency is also decent, but their flexibility is low, and they belong to a closed architecture. And finally, the last one we just mentioned today, this company worth 20 billion, Grok. This company, its LPU actually has poor AI training capability, and its flexibility is also low. But its one biggest advantage, which sets it apart from others and from Google, is its inference latency. It's really, really good. Although its flexibility is low, its efficiency is very high. So here's the key point. If you think about it, based on the weighting of these stars, you can see one thing. NVIDIA's weakest point is its inference latency, and the strongest is 5 stars. Now, just as NVIDIA is worth 20 billion and comes in, it happens to fill in this 5-star capability. So bringing it in other words, with this acquisition, NVIDIA now has 5 stars across the board, whether it's in AI training capability, inference capability, flexible architecture, or the entire voice system. That's why, as I said right from the start, this acquisition is like giving NVIDIA wings. The technology and talent from this company make NVIDIA even stronger, because it fills in the weakest spot in NVIDIA's own GPU system. This is really impressive, and the future, I think this is going to be a huge deal, so you should definitely keep an eye on it. So to put it simply, combining NVIDIA's GPU with Grok's LPU means it can enhance both AI training and AI inference capabilities. Let me explain in an even more straightforward way. What exactly is AI training? I'll give you the simplest example. Let's say today you ask GPT something. You can ask it about any topic, like which restaurant is good, how to do something, or how to make a presentation. It will take all the related information from the internet or various sources, combine it, and then create a very complete presentation, or give you a detailed outline. All of this can be achieved through AI training. It's really useful. This is what AI training can do. But AI's reasoning ability and its answers isn't that strong. Okay, when you use Oppo AI or OpenAI, it uses this chip to generate answers, to do some reasoning, to perform certain functions, and it can do a pretty good job. In fact, 80 to 90% of the time, the answers are really, really good, but it can't give you deeper insights. Sometimes you'll notice that when you ask AI certain questions, when it comes to certain topics, it sometimes gives off-topic answers, or the answers sound right, seem reasonable, but in the end, you realize you're not really sure what it's actually saying. It's like it's talking, but not really saying anything. For example, it might say, because of this and that, it will accomplish something. Or, if there isn't this or that, it won't accomplish something. Every sentence sounds reasonable when you hear it, but when you actually try to apply it in practice, you start to wonder, so what should I do now? It's missing a step of reasoning, lacking a deeper, more thorough process of deep thinking and logical inference. So for this, honestly, you really need to rely on LPU for training. If in the future, after AI has undergone general training and then its reasoning abilities are further enhanced, then when it answers questions or makes decisions, it won't be so vague or abstract. In fact, it will be much more beneficial and will further improve human work efficiency. So just to add a bit more to my answer, I think spending $20 billion to acquire this technology is actually a big plus for them. As for Nvidia, on Tuesday the 24th, Christmas Eve, they had a slight drop of 0.32%. Honestly, that's not much. Let's also take a look at how things have been over the past 6 months. Over the past 6 months, Nvidia has stayed around this area, hovering above this platform, consolidating and fluctuating. Sometimes it hits new highs, then drops back down, and now it's close to this consolidation zone near the platform. This neckline from the past 6 months is important not to break below. As long as it doesn't break below, it won't form a head and shoulders top. Let me say that again. This blue neckline has been consolidating for the past 6 months. As long as the blue neckline isn't broken, it still won't become a head and shoulders top. If Nvidia performs better, at the very least it should be able to hold above the 50-day moving average. If it can stay above the 50-day moving average, that would definitely be a positive sign for Nvidia's performance, whether it's for the opening of the market next year or for next week's trend. So that's a quick additional note about Nvidia for everyone. As for whether AMD, this competitor, will be replaced, well, today Samsung just announced that they plan to use their own self-developed GPU chips for the first time in 2027. And they want to replace the chips they originally bought from AMD. Gradually, they're moving away from relying on external chips, whether from Nvidia, AMD, or other companies, and shifting toward developing their own. Actually, it's not just Samsung. Many companies, including Meta, Microsoft, and even Google, are eager to develop their own chips. They all want to cut off their complete dependence on Nvidia. This is totally reasonable. Every company does this. So what are they saying? In the future, starting with their own in-house GPU department, Samsung will use their own chips in their phones. Samsung phones are really impressive, actually. They're the #1 in the world. Starting from their phones, they'll gradually expand to smart glasses, robots, automotive systems, system-on-chips, or AI chips, and will slowly switch to using their own self-developed GPUs. So in the end, will they stop using Qualcomm or AMD altogether? In my opinion, not really. They're saying that by 2027, they might gradually start using their own chips, but I think there's no need to worry too much before 2027. There's no need to be concerned that AMD or Qualcomm chips will suddenly be dropped by Samsung. I really don't think that's necessary because as things stand, there's still at least a year and a half to go. And in this year and a half, will Samsung really stop using other companies' chips and just use their own self-developed products, and by 2027 fully switch to their own chips? I think there are still many uncertainties. After all, AMD will keep making progress, and so will Nvidia. Just look at the GB200, GB300, and the related B100, B200, B300 series chips coming out now. Nvidia's Rubin series continues through 2027, with new series expected. AMD's Ni series from 300 to 348 also advances, with 400 or 500 anticipated next year. Both Nvidia and AMD will keep moving forward. Regarding Samsung, it's not a competitive advantage. For the next year, major problems are unlikely, but long-term concerns exist. These concerns hinge on AMD or Nvidia's continued investment in R&D. In developing even better chips, I think they will keep going. So I think this news is just something to take note of. It really doesn't have much impact on AMD. The day before yesterday, AMD had a slight increase of 0.07%. Both AMD and Nvidia have this neckline, and this neckline is pretty much right at around number level. If you want to know exactly how much, just look at the screen and you'll see the price. As long as this neckline hasn't been broken, there's no need to worry too much. Of course, the best thing would be for it to rebound. If it can get back above the 50-day moving average, will that help AMD and Dr. Lisa Su, Auntie Su as she's called, with the future stock price? Basically, if the 50-day moving average holds steady, that's better. The support below is this blue curve. If it doesn't break below that, then it won't turn bearish. All right, that's a little extra info on AMD and, what was it called? The NBA part? Thanks, Amy Nina. And thanks to Amy and everyone for supporting our Quinying Goodnight Quinying team as we look toward 2026. I hope everyone does better and better on their investment journey. If you have any questions or need anything, just leave a comment. If we know the answer, we'll add more info for you. Of course, sometimes our additions might not be 100% accurate, since our prep time is limited. Like today, I didn't even go to the year-end party, right? So if time is tight, or sometimes my blood sugar is low because I'm really busy and maybe I didn't eat enough of my lunch, then I might not have enough time to prepare, and with low blood sugar, it's inevitable that some of the information might not be 100% accurate. Maybe someone will exaggerate by 3 or 5% or whatever. So if there are any inaccuracies in the data, I hope everyone can be understanding. Or you're welcome to leave your valuable thoughts on the message board or in the chat room. Or if you... Let me give an example. For instance, some of you might be especially knowledgeable about GPU chips, while others might be really skilled at things like raising kids or shopping for groceries, like picking out the best radishes. So if we happen to talk about something related to GPU chips or mention CPUs or LPUs, maybe you can jump in and add your own specialized knowledge in those areas. I think that's great, and it really helps with our interaction. That way we can learn from each other. Sometimes after the show, I always check your comments. Every time you leave a message, I read it. Sometimes I actually learn some different information or important knowledge from your comments. I think that's how we can all grow together. Alright, as for the US stock market, companies up, DISC, which rose 100%, then 33%. Copper and gold firm Freeport also rose 2.81%. Albemarle Corporation rose 2.55%, and even Micron Technology performed well. It went up by about 1.8%. Now, as for the companies that went down, who are they? There's Carlyle Group, which dropped by 1.58%, Warner Bros. Discovery, which has been making a lot of headlines lately. One moment people are saying Netflix wants to acquire them. The next moment it's Paramount or Sky looking to buy them. A third company, Disney, may join. Warner Bros. Is highly sought after. Warner Bros. Fell 0.79%. Paramount and Skydance also seek acquisition. They slipped in pre-market trading, down about 0.3%. Other stocks like Moderna and Nasdaq dipped, around 0.5%. Looking at the US stock market, it's still leaning bullish. While the bulls are in control, the Dow Jones Index is holding strong. It's still doing well. Among major indexes, the Dow Jones can be considered a Trump achievement concept stock, so the Dow has a good chance to hit new highs again. The day before yesterday, the S&P 500 rose fastest, already reaching a new high. After the S&P, the Dow may hit a new high in coming days. Then we'll see if the Philadelphia Semiconductor Index and Nasdaq can catch up. The Dow rose 0.6% the day before yesterday, staying above monthly and quarterly moving averages. The Philadelphia Semiconductor Index also rose 0.28%, also staying above monthly and quarterly moving averages. The Magnificent Seven? They're a confidence indicator for major international indexes. Recently, they also rose by 0.12%, holding above monthly and quarterly moving averages. So looking ahead to 2026, if unsure what to do, if you don't know what to do, just keep an eye on the Magnificent Seven. That's enough. Because when it comes to their competitive moat, their advantages really are still superior to any other company in the S&P 500. In fact, Goldman Sachs has made a special forecast. Goldman Sachs specifically predicted that next year, in 2026, about half of the S&P's profit growth could come from the contributions of the Magnificent Seven. So I think if you really don't know what to do about the big players, just start with these few companies. I think that next year's profits, including factors like the expected interest rate cuts in monetary policy and the midterm elections, are all relatively favorable for the bulls. So just pay close attention to these things when managing your investment portfolio. That's all for the content related to this group. When class is over, remember to like, subscribe, and share for us. Just a reminder for everyone, starting now, every Friday afternoon, there will be a short video from the Yuanta Weekend Report, about 3 to 5 minutes long, covering various topics related to the Taiwan stock market. If you're interested, feel free to check it out and keep an eye on it. All right, that's all for everyone's financial management today. See you next week. Bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.